Okay, welcome to part 2 of this 3-part training series. Now today we're going to be talking all about trading plan mastery. Now why is this so important as a trader? To have consistently profitable results as a trader requires consistent execution of an edge. Now what I've seen the last 6.5 years observing myself as a trader and also working with hundreds of traders, having thousands of traders come through my program, is that it's those who can consistently execute on an edge that ultimately get consistent profits. However, there's going to be fear and greed that take away from your trading plan. There's going to be psychological challenges that take you away from your trading plan, which is what we're going to cover tomorrow in day 3 of this 3-part training. However, a trader needs to start off by having a clear mechanical edge. They need to have a system that's written down in a checklist form, just like a surgeon before they go and perform surgery, or a pilot before they take off in a plane. They have procedures, they've got checklists, they've got processes that they follow because they know they don't want to leave it up to emotion. They know they don't want to leave it up to making decisions in the moment. They've got protocol that they follow. And having worked with a lot of very successful traders, I've seen that the best traders have a clear system, they've got it written down, and I'm actually going to share with you bits and pieces of what I have learned observing 7-figure traders, working with 7-figure traders, and helping them put together their trading plans and refining their finer details. I'm going to share with you some insights on that. Now, I cover my complete full masterclass in week 4 of the 12-week program. So if you want more of this, that's the place to be. But today we're still going to cover a lot, and I'm going to give you some great insights. So let's get into it. So trading plan mastery, this is part 2. Now, the dangers of the market. A lot of people don't recognize that the market can be a very dangerous place. In a sense, it's some form of a jungle where there's a lot of dangers, there's a lot of risks, there's a lot of things that you have to be cautious about. And if we don't have processes, or we don't have guides, or we don't have rules that we put in place, we are left susceptible to the dangers of the market. However, if we can structure ourselves and put rules in place and processes in place, we can take full advantage of the opportunities the market presents. So, a trader needs to have a great system, a step-by-step plan that allows them to know exactly what they're doing in the market, exactly what they have to do in the market. To have a great psychology in the market, I believe you need to have a great system that's mechanical and is put down in a trading plan. To have great results, you need to have a great system that's in a trading plan, mechanical step-by-step, and then you need to have the mindset there to help out with that as well. But I really think the starting point is having a great system that's written down. So the market allows for an unlimited amount of decisions to be made and opportunities, which can be dangerous. You can make a lot of money in the market, you can also lose a lot of money in the market. The trading plan is an opportunity for you to put some criteria in place, some rules in place to ensure you're making profitable decisions time in, time again. A trading plan needs to be there to guide you in making only the wisest and most profitable decisions. That's how I want you to think of a trading plan. It's a guide, it's a set of rules, a set of criteria that will guide you in what could be a potentially dangerous market to help you make the most profit possible. Trading plan overview. How a 7-figure trader structures their plan. Now, this is what I've put together after learning from many different people and observing some of the best traders I've worked with as well. This is how they have their plan. It's not overcomplicated, it's not undercomplicated, it's just right. And they have just what they need in there to ensure they can consistently execute. Okay, the first thing is you need to know when you're getting into the market or where you're getting into the market. You need to know with clarity where your entry point is. Secondly, you need to know where your exit point is, where you're getting out the market. And thirdly, you need to know how much you're risking. So what I've actually done for today's lesson is I've put together a template for you to guide you in ensuring that you have these 3 components of your trading plan put together. You know where you're getting in, you know where you're getting out, and you know how much you're risking. So when we go in and break this down in more detail, it looks something like this. With our entries, you want to have an area of value. What is it you need to see on the higher time frames? Maybe you're looking at the daily or the weekly or the 4-hour. What is it I need to see on those higher time frames to give me an indication this is a good area of value? And then once we're in that area of value, once the criteria is met of the area of value, you then zoom into the lower time frames to look for an entry criteria. And then what specific entry criteria do you need to see to pull the trigger and take the trade? This is how I want you to be thinking about entries. What's the area of value on the higher time frame? Once that's met, go down to a lower time frame. What's the 1, 2, 3, 4, maybe 5 criteria that you need to see to then put risk on in the market? In terms of management, when I enter a position, where am I putting my stop loss? Is the first thing you need to ask yourself for your trading plan. Where do I put my stop loss? Do I have a break-even rule? How do I trail to break-even? Do I trail my stop? Do I take partials? That's if you have a break-even rule. Some strategies may perform better without a break-even rule. Will I actively trail my stop? If so, how? Or will I just take profits? Or will I do a mix of both, take profits and active management? These are all questions you want to answer and put into a trading plan so you're prepared in the market. And then for your risk, you want to be paying attention to how much do I risk per position? What are the maximum daily or weekly losses I can take before I stop trading, if anything? Are there any other risk management or money management rules that you put in place? For example, I've covered drawdown buffer risk rules in other YouTube videos, and in my 12-week program, I cover my risk rules. So you want to pay attention to these things and you want to put them into a trading plan. So what I'm actually going to do now is I'm going to bring up a template which you'll have access to download in the link below. I'm going to bring that up now. I'm going to work through of how you can construct and organize your trading plan to ensure that it's in great condition. You can go off and consistently execute on this thing and you can make consistent profits in the market. Okay, now remember, if you want to have consistent profitability in the market, you need to consistently execute on an edge. You need to define what your edge is in the trading plan and you need to stick to it. A lot of traders are trading based on how they feel in the moment. You have to understand that if you're trading based on how you feel in that particular moment, you're not trading an edge. And you're trading based on outcome-based expectations, which we're going to cover tomorrow, and you're not consistently executing on the same thing time in, time again. You don't have an edge you're executing on. And you can't expect consistent profits if you're executing based on how you feel on that particular day. This is where creating a mechanical trading plan is so important, and why I put it as a second part of today's, this 3-day training, to ensure that you consistently execute on an edge and you can have consistent profits. So this trading plan is broken down as we discussed before. We're going to talk first and foremost about the entry, the area of value. Now, what is it you need to see? And what I've written here is insert simple rules, a checklist, and a picture. So maybe a simple rule you have for your area of value is, I look for a key rejection of daily or weekly, maybe support and resistance, let's just use this as an example, or complete pattern on the higher time frame. Maybe that's a very simple rule you have to give you an idea of an area of value. When you see a key rejection of a daily or weekly support or resistance or complete pattern, some sort of a complete structure. Now, you also want to have a checklist here. So maybe your checklist is double top, double bottom, a complete reversal structure, some sort of channel that you can draw on. And then maybe you want to see a complete daily retrace or strong candlestick formation to give you an indication that that's a complete rejection in that area. And then maybe that's your area of value criteria, so that once you get those things there, one or many of those things you need to define in your trading plan, you then now look for the entry criteria. After you get maybe a double top with a rejection, you then go down to the 4 hour, the 1 hour to then look for the entry criteria to get involved in that particular position. And then the other thing I said here is you want to add a picture. So you want to come in here and add some sort of picture, an image, right? And maybe there's a screenshot of that or your chart so you can visually see how that looks in your trading plan. Okay, because remember, trading is a very visual thing, especially if you're looking at charts. You want to train your mind to see these types of formations in that moment. The best way to do that is have pictures. Okay, so I'm not going to add a picture, but make sure you do in your trading plan. And the next thing is entry criteria. What's the simple rule you have here? And then what's the criteria, right? What's the checklist criteria? Criteria 1, criteria 2, criteria 3, and maybe you need to see all 3 of those criteria met. And then if you have a double top rejection and then you go down to the hourly chart and you have 1, 2, 3 criteria met, you pull the trigger. So as you can see, this trading plan is a very step-by-step way to break down your entry and then you go to your exit. Where do you put your stop loss initially? Maybe it's above a swing high or below a swing low. How do you try to break even? Maybe when you're running 1%, you try to break even, or when you're running a certain percentage, you take off partials to cover your risk. And then active management. Are you going to trail your stop actively, or are you going to take profits, or are you going to do both? And then what are your risk management rules? Add simple rules, add checklists, etc., etc. So I've put this trading plan template together for you. You have a link of that in the description below the video. So download that and start filling it in. Start putting your trading plan together the way I explained, because that's going to give you a step-by-step mechanical system to follow in the markets. And you're going to be consistently executing on this plan once you've created it, especially after we cover what we cover tomorrow in the mindset work to ensure you stick to your plan. But first and foremost, break it down, make it specific, make it simple rules, checklists, and pictures. And I promise you it's going to make a huge difference in your execution in the market. Okay, now a few extra top tips here. These are some important points. First and foremost, use simple rules, checklists, and simple images. You want to train yourself to be sharp in the market. And if you have so much writing in your trading plan, you're going to get bogged down. You want to have simple rules, a few checklists, bam, 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 and pictures. You want to be sharp. You want to be fast in the market. So if you see your setup coming up, cross-reference that with your trading plan. Great, this setup aligns with my trading plan. I'm going to execute. You want to review and refine your trading plan every 3 months if it's appropriate. So you don't want to do it too soon, but you want to have a look at your results for the last 3 months and go in there with a fine-tooth comb to see if any components of your entry or your management or your risk need to be refined. And then if it's appropriate, if it makes sense, you can then refine your trading plan. Just make small tweaks. Don't make drastic changes too often because you'll mess up your edge. But my suggestion here is keep your plan on your computer, keep it on the Notion document, keep it on a Word document, keep it on a Google Drive to ensure you have the opportunity to go in there and refine it and read it every day. You maybe want to print it out so you have it in front of you, that's fine, but you may need to print it every time you refine it. So just keep that in mind. Now, would you try and get onto a train that had already left the station, or a train that hadn't arrived at the station yet? Seems like a silly question. Obviously the answer is no, you wouldn't. But the truth is, so many people are trying to jump into trades that have already left the station, so to speak, or they haven't even arrived at the station yet, and they're not waiting for the trade to align with their trading plan. So key thing here, now that you have your trading plan together, and I want you to pause the video and really put that together after today's lesson, is that now that you have a trading plan, now that you have a system, it's all about sticking to that. It's about consistently sticking to that trading plan. When the market aligns with your trading plan, you're gonna execute. If the market already goes, you don't want to chase it. If the market hasn't arrived yet, you don't want to try and force something that isn't there. Now, what we're going to cover tomorrow is we're going to talk about some really mind-blowing theories that I've created in trading mindset to ensure that you actually stick to the plan you've created now. You're not run by fear, you're not run by greed, but you just stick to your processes. And that's what I believe is going to help tie this puzzle together to ensure you have consistent results. So make sure you go in there and you complete yesterday's work on getting congruent and setting goals, and also today's work on creating that trading plan, because when we get into what we're going to cover tomorrow, you want to have all that stuff done, and when we get into that, it's going to be mind-blowing. So I can't wait to share that stuff with you. But go on and complete your trading plan. It's going to be very useful. So a bit of a recap. Here's a quick summary. Create a mechanical system. Why? Because you need to consistently execute on an edge to have consistent profits. A mechanical system, step-by-step system, allows you to consistently execute an edge. It makes it so much easier. If you're trading based on discretion, if you're trading based on how you feel, you're going to change it here, you're going to change it there, you're not going to be executing an edge. Summarize your trading system into a plan. Keep it simple. Use simple checklists. Use images. Use simple rules. Refine the plan when appropriate. I wouldn't be refining your plan any more than every 3 months because you probably are changing it too much if you're doing it. So every 3 months, do a quick scan of your results. See if you can't fine-tune a few things, but don't refine it too often. Hope that helps. Okay, now wait for your setups to be presented in the market, then execute. And again, we're going to cover this in detail in tomorrow's lesson, which I can't wait for. So keep an eye on your emails because I'll be sending that through to you. And I'll see you all tomorrow for that final lesson.